Are you worried about your savings losing value? Have you ever felt like your money doesn't go as far as it used to? You're not imagining things. Your cash is losing value every single day. Inflation has been quietly eroding the purchasing power of money for decades. Since 1950, the US dollar has lost over 90% of its value. That means what you could buy for $100 back then would now cost you over $1,000. And it's not slowing down. If you have $100 today, in just 10 years, it may only be worth $80 in terms of buying power. Inflation is like a silent thief. It takes from you without you even realizing it. But here's the good news. You don't have to let it win. In this video, we're going to reveal 8 powerful assets that can not only protect your wealth from inflation, but actually help it grow. From gold to real estate, stocks, and even digital assets, we'll show you where to put your money to make sure it works for you. Stick around to the end, because we'll also reveal the safest place to keep your money in today's economy. Number 1, gold and precious metals. Considered timeless stores of value for over 5,000 years, gold has been one of the most trusted stores of value. While paper money can lose its worth, gold remains a solid asset. During financial crises, gold has historically performed well. Take the 2008 financial crisis as an example. While stock markets collapsed by more than 50%, gold prices soared by nearly 25%. This pattern isn't new. In the 1970s, when inflation reached double-digit levels, the price of gold surged by more than 500%. But gold isn't the only precious metal worth considering. Silver and platinum also play significant roles in industry and are always in demand. Silver, in particular, has a history of tracking inflation while also being more affordable than gold. If you want to safeguard your wealth from inflation and economic uncertainty, including gold and other precious metals in your investment portfolio is a wise move. Number 2, real estate, the wealth builder. Have you ever wondered why so many billionaires invest in real estate? It's because real estate is real wealth. Unlike stocks, which can fluctuate wildly, real estate is a physical asset that not only appreciates over time, but can also generate passive income. Imagine you own a rental property worth $300,000 and it gives you a 6% annual return. That means you're earning $18,000 per year just from rent. On top of that, your property value is likely increasing as well. Historically, real estate has outperformed inflation, making it a powerful wealth-building tool. Another advantage, leverage. You don't need to pay for a property in full. You can finance it with a mortgage, allowing you to grow your wealth using borrowed money. This is a strategy used by the wealthy to multiply their assets. Number 3, Treasury bonds. Safe and secure returns. If you're looking for one of the safest investments available, Treasury bonds should be on your radar. These are government-backed securities that provide consistent returns with very low risk. The US government has never defaulted on its debt, making Treasury bonds one of the most reliable ways to grow your money securely. Unlike stocks, which can be volatile, Treasury bonds provide stability, especially during economic downturns. There's also high liquidity, meaning you can sell them whenever you need cash. For those who want a safe place to store money while earning a return, Treasury bonds are a solid choice. Number 4, index funds and ETFs. The power of diversification. What if you could invest in the entire stock market with just one purchase? That's exactly what index funds and exchange-traded funds, ETFs, allow you to do. These funds track major market indices, such as the S&P 500, which has provided an average annual return of 10% over the past century. Instead of picking individual stocks and taking unnecessary risks, Index funds automatically diversify your investment, reducing potential losses. For example, during the 2020 COVID-19 market crash, many individual stocks plummeted. However, investors who held ETFs tracking the entire market saw their portfolios recover much faster. This makes index funds and ETFs an excellent choice for long-term wealth building. Number 5. Dividend-paying stocks. Earn while you wait. Wouldn't it be great if your investments paid you just for holding them? That's exactly what dividend-paying stocks do. These are shares of companies that distribute part of their profits to investors. Companies like Coca-Cola and Johnson & Johnson have paid reliable dividends for decades, even during recessions. Here's why they're so powerful. Let's say you buy 1,000 shares of a company that pays $3 per share annually in dividends. That means you're earning $3,000 per year without selling a single share. On top of that, the stock's value can still grow over time, giving you capital appreciation in addition to passive income. By reinvesting dividends, investors have seen almost 40% of total stock market returns over the long term. If you want an investment that generates income while growing in value, dividend-paying stocks are a must-have. Number 6. Industrial raw materials and commodities, the backbone of the economy. Every building, every car, and every electronic device depends on industrial raw materials like copper, steel, and aluminum. These commodities are essential to the economy, and their prices tend to rise during periods of economic growth. Between 2020 and 2022, for example, copper prices surged by over 70% as governments invested heavily in infrastructure projects. By investing in these materials directly or through commodity ETFs, you can benefit from rising demand while also hedging against inflation. These materials are crucial for industries like construction, technology, and manufacturing, making them a valuable addition to any portfolio. Number 7. Cryptocurrency, the digital gold of the future. Can Bitcoin be the new safe haven asset? While cryptocurrencies are known for their volatility, they have emerged as an alternative hedge against inflation. Bitcoin, for example, is capped at 21 million coins, meaning it cannot be devalued by excessive printing like traditional currencies. In 2024, Bitcoin's price more than doubled to over $100,000, driven by increasing mainstream adoption and ETF approvals by US regulators. Although risky, many financial experts recommend allocating 1 to 5% of your portfolio to cryptocurrencies for diversification and long-term potential growth. No. 8. High-yield savings accounts keep your money working. Your cash doesn't have to sit idle. High-yield savings accounts offer significantly higher interest rates than traditional bank accounts, allowing you to earn more on your deposits. Many online banks offer attractive rates because they have lower operating costs. Plus, these accounts come with FDIC insurance, protecting up to $250,000 per depositor per institution. This means your money is not only growing, but also secure. If you want liquidity, safety, and guaranteed returns, a high-yield savings account is one of the best places to store cash. So what are the final thoughts? Where should you keep your money? So what is the absolute safest place to keep your money? It depends on your risk tolerance and financial goals. While cash and government bonds offer security, inflation can slowly eat away at their value. That's why a balanced approach is essential. Investing in a mix of gold, real estate, stocks, and other assets can help protect and grow your wealth. Now that you know the 8 best assets to beat inflation, which one will you invest in first? Let us know in the comments. If this video was helpful, be sure to like, subscribe, and share it with someone who needs this information. Your financial future starts today. Take action and protect your wealth.